Hello and welcome to our Minds and Money 5 at 5 show, which this week is sponsored by Palladium 1 and MKU Services and is brought to you in association with Resource Global Network. A few admin announcements before you start. Just a brief background to 5 at 5. The aim of 5 at 5, 5 guests at 5 p.m. is to maintain engagement between investors and miners through a lively interactive format whilst we await the return of physical events. To make it as interactive as possible, please have your video switched on. To ask a question, you've got a couple of options. You can either submit them via the chat function that you'll see at the bottom of the screen, and also at the bottom of the screen, you'll see the Invite Participants button. You can go and wave your virtual hand. I can unmute you, and you can also ask your question live. We'll also be having polling questions throughout the webinar where you can vote. Being towards the end of the week, of course, invite you to bring along a glass of wine or beer to relax, sit back and enjoy. For this week's show, we have a great lineup of guests. We have Derrick, Weyrauch, President and CEO, Palladium 1. Derrick has a long and distinguished career, including stints at Oro Minerals, Jaguar Mining, Banro and Ardina Minerals. Jaimes, Commercial Director of MKU Resources. Erick has over 30 years of experience and is a world-class expert specializing in mergers, acquisitions and divestitures in the petroleum and mining industry. Mark Rice is Senior Vice President of Auramet. Mark has 25 years experience in the business. He now advises mining clients on dealing with project finance capital providers. And lastly, we're delighted to welcome Chris Berry, CEO of House Mountain Partners. Chris has been an independent analyst since 2009 with a focus on energy metal supply chains, including lithium, cobalt, graphite, nickel, copper, vanadium, and rare earths. So perhaps we can start off with a topical question. Elaine, perhaps you can go and bring up the polling screen. If there was one wish that you had for the mining industry in 2021, what would it be? And you've got 5 options here. First option is return to normality post-COVID-19. Secondly is the mining industry to become more ESG focused. Third option is better quality managed mining companies. Fourth option is higher commodity prices. And the 5th option is I would like to see a crypto blow up. That was sent in by one of our panelists. So whilst you're all voting, let's go around and ask for a view of our panelists. Perhaps I can turn to yourself first, Chris.
I mean, look, some of those they're all very important in different ways. I'm not, long or short crypto, so I'll recuse myself or take a pass on that one. But look, obviously higher commodity prices really drive the share price of these companies, regardless of producer, developer, or junior mining play. I think 2020 was obviously an interesting year in a number of different ways. I think that at the beginning of the year, I don't think anybody probably would have thought that copper or nickel would have rebounded off of the lows the way that they did. My sense is that was really because China kind of got ahead of the rest of the world in terms of containing COVID. And also, the credit impulse in the country is still very strong. And, you couple that with restocking, and I think that's why the base metals really took off. So, I'm not sure how much gas is left in the tank this year, but just to sort of come back to your original question, I would think that, the higher commodity pricing is what we all want to see. And I think over the longer term, we're going to get it.
Okay, thank you very much for that. Mark, what would your answer be?
Well, since I was the guy that put in, like to see the crypto blow up, I think I have to vote for my own suggestion. And I put it in there for a bit of fun. Look, I'm not long or short crypto either. I, witnessed the cannabis industry over the last few years suck up a lot of capital that I would like to see go to mining. My fear is that crypto is somewhat replacing that cannabis for that speculative investor. Of course, the cannabis stuff has had its correction. Yeah, I would vote for that one for a bit of fun.
Yeah, I have to say, I have to declare a slight interest here on a sort of a slightly crazy whim. About 18 months or so ago, I brought some shares in Hive Technologies, which, as anyone knows about that share, has had a rather sort of up and down roller coaster ride. So if your answer is I would like to see a crypto blow up, I say as long as it's not Hive, Mark.
Okay.
What would your answer be, Erick?
So I think I don't remember exactly what the wording was for the answer, but I think for me it would be better management. The reason why I chose better management is because, if 2020 taught us anything, is that we were not prepared for such an event, like COVID, the pandemic. So I think having a better planning, strategic planning for these type of events, better risk analysis and mitigation plans in place for pandemics or for anything else that may happen in the market that can drive prices down, that can change the dynamics of how we work. I think to me that would be what I would wish for in 2021. Better planning and better management.
And since you've kind of like been in the industry, has the quality of like management got better or worse?
I think it's one of those things that hasn't changed very much. I mean, people just focus on commodity prices. People just focus on expenditure. People, resources, and they seem to downplay some of the potential risks. I mean, if we were back in 2019, if anybody was to say, let's plan, let's put on a risk analysis, a total shutdown of every mining site in the world for a couple of months, people would have said that's never going to happen, right? So, so that's why I think not minimizing some of those potential high risk activities is a really key thing that I believe is important for us to consider when running project economics in the future. Better mitigation plans for things like this.
And turning to yourself, Derrick, what would be your one wish for the mining industry in 2021, other than Palladium One's share price to go through the roof?
Well, I have probably a couple wishes, but I think the ongoing monetary stimulus trying to get out of the COVID is going to be very helpful. And really, in my mind, means you need to have very good management and improvement in management in order to help navigate companies through what's coming down the pipe here. Certainly with the stimulus, it's going to mean real things have greater value. And I think there's going to be a notional increase in prices across the board. But at the end of the day, it comes down to the management teams and the boards to effectively manage their particular commodity space and exposures. So I would agree that's a key area that we need to be thinking about. Because let's face it, the industry historically has a very good reputation and a well-earned one of being destroyers of capital, and we've got to stop that.
I'm just getting the polling the polling answer up. It's a fairly tight sort of poll, but just the marginal winner, I think Elaine's going to get the poll up now on 33%. There was a return to normality post COVID-19. Turning to yourself, Derrick, first. When will we be returning to normal post COVID-19 for the mining industry? Do you want to hesitate? Do you want to give us an answer? Do you think Q2?
Well, I think it comes down to vaccines being effective and being effective for the mutations that are ahead of us. So I'm not anticipating any normalcy, pre-February of last year until at least 2022.
Mm-hmm. What do you think, Erick?
I agree with that, and especially because some of the bigger mines, some of the bigger contributors to the mining sector are located in third world countries. A lot of mines in Chile, Indonesia, Africa, Zambia, Congo, in some of those places where it has proven to be difficult for the vaccines to be distributed. I think that's going to be a big disruptor in the mining industry for a while. So maybe, I'll agree with Derrick, maybe 2022.
Mm-hmm. When do you think we'll be back to normal, Mark?
Yeah, I have to say I share the same opinion. I mean, I think, as Derrick was saying, good management of capital, but I think investors are also looking at socially responsible and health and safety of their employees in mining companies. So if you're looking for those investment dollars in well-managed companies, not just in terms of deploying capital, but also in looking after the local communities and your employees, I think there will be mining companies I think have done a really good job with it. Mostly, and I deal with a lot of them. I think most of them have done a cracking job, but I think it will still have some implications going through till 2022.
In terms of just a follow-up question, Mark. One thing I'm always curious is because obviously one thing I've been doing a lot along with everyone else last year is doing more working from home. Would you think that working from home will sort of like still it won't go back to normal in the mining industry? Do you still think we'll see obviously like more like automation in the mining industry, a higher percentage of people sort of like having gone down the working from home the home route, not sort of like going back to the office?
Well, I haven't done any in-depth studies, but intuitively, I think what the COVID has done on a global basis is it's accelerating technology. Technology was already moving in job displacement. The mining industry is perhaps a little bit slower in terms of implementing technology. It's always been a little bit still behind the times. I think what it will do for mining is what it's been doing for finance and one-to-one, and Mines and Money conferences like this. Technology will drive people to use more of it, and once you start to use it, you won't be able to put the jack back in the box. I think there's a lot of really good reasons for using technology: cost, safety, convenience. People like it, so I think it's one of those things where it's perhaps a good thing for the mining industry that they're going to sort of be forced to take on more technology, and that will change, what the job profiles are in each industry.
And last yourself, Chris, when do you think we'll be back to normal?
Yeah, there's not a lot that I can really add there. I mean, I'm as a non-epidemiologist, I'm going to assume that maybe we will never return to normal. Maybe mask wearing and social distancing is going to be part of the fabric going forward. I'm not saying it's going to be like it is right now, but I think that even in the wake of 2020, at least I'm already starting to see how certain industries are starting to adapt and starting to change, whether or not it's on the back of ESG mandates, which some people disagree with. Some people think it's a noble pursuit. Some people don't. But with the metals that I work with, obviously on the battery side, the automotive business factors really, I think it's very, very important, right? And so what you have seen in 2020 is a situation where traditional automotive sales, internal combustion engine sales, finished the year actually down and are still sort of generally speaking flat to down, depending upon where you look in the world. And EV sales are actually increasing by double-digit, and in some cases, triple-digit rates. Obviously, that's off of a much lower base, but my sense is it's just one of those maxims in life, right? Like you focus on what you can control, and I can't control COVID and when we're going to get over it, but I think it's really important to be looking across different industries and thinking about how COVID is changing buying behavior, and in particular, again, I'll just come back to the automotive and the battery business and some of the changes that I'm seeing there that I think are structural and permanent and really, really exciting right now.
Okay, thank you very, very much for that. So I think without further ado, let's move on to our first mining update of the show. Derrick Weyrauch is an experienced mining executive and corporate director. His background includes finance, risk management, corporate restructuring and turnarounds, coupled with M&A, strategy development, execution, and post-transaction integration. He's the co-founder of Magna Mining Corp and is former director of a number of companies, including Eco Minerals, Jaguar Mining, and Bamro. He's also the former CFO of Jaguar Mining and Dina Minerals. He's currently president and CEO of Palladium One Mining, a Platinum Group element nickel copper exploration and development company. Over to you, Derrick. It would be great to have an update about your projects.
That sounds good. Thank you very much for the introduction, Andrew. Elaine, if we can flip through, just point you to the forward-looking statements. You should probably refer to those, and they will be distributed after the presentation. So Palladium One is very much an exploration stage company. We're focused on metals for clean air, and that includes metals for the conventional internal combustion engine that helps mitigate the pollutants from the tailpipe, as well as the battery metal complex. We've got 4 projects, 2 of which are in Finland and 2 in Canada. In each of our projects, we've identified a number of targets for future exploration and success. Our objective is to position the company with very large land positions in tier 1 jurisdictions only, and that's why our focus is in Finland and Canada. Part and parcel of our story is that we have a very credible and significant resource upside potential, and I'll highlight a little bit of that in a moment as we look at 2 of the projects. From a balance sheet perspective, we're very well capitalized. At the end of December, we closed with about $7.2 million of cash in the bank, about $1.7 million of in-the-money warrants that I would anticipate for large part are going to be converted in the next few months. And our strategy and that the team collectively, our focus is to grow the resource endowment on a per share basis for our shareholders in an effort to drive value. We've had 2 significant discoveries in the course of the last 12 months. One in Canada on the nickel side of things, and in Finland on polymetallic, where palladium is the dominant metal. And we really like being in this space because of the fundamentals for the palladium, nickel, and copper as we move forward. And Elaine, if you can go to the next slide, please. So just a quick little snapshot here on our LK project in Finland. In the yellow dashed lines, you can see where we have our existing pit-constrained resource that has been defined. And in the background colors, those various blues and greens and browns are induced polarization anomalies from geophysics, which are very good at targeting the rock types that we're looking for. If you draw a straight line down the right-hand side of that pit outline, everything to the right-hand side or to the east of it was discovered in the early part of 2020. And of significance at the Kukua South zone that you see outlined in the dashed red lines is a very large target, about 4 kilometers in strike length, that we uncovered in January, February last year, and followed up in August and September with 100% success rate with 13 drill holes going into that, proving that the anomaly is very shallow, is mineralized, and has extremely good grade, actually very consistent with what we have in our existing resource. And hole 16, I'll point that out, it's in the middle there, has a very high grade segment, over 3.5 grams at surface, over 62 meters in a core interval, basically approaching underground grades at only about 19 meters downhole. So, we're really happy about that. And we've announced a 17,500 meter phase 2 infill drilling program across that 4 kilometers to get it into 100 meter grid spacing and be in a position to define an existing resource. Now, this is, the question in our minds, and what I get asked a lot is, well, you've got about 1.2 million ounces in the existing pit. It's 1 kilometer of strike length. How many more times do we have that in Kukua South? And the answer is right now, we don't know. But as you can see here, we've hit on 100% of our drilling. And we have drilled just before Christmas another 4,300 meters, the results of which will be coming out shortly. And we've even touched that gap zone. So we're quite optimistic, but this is only one segment of a 38 kilometer contact. We know the strike length continues about 2.5 kilometers to the east, and we're looking forward to testing that in the very near future. And our drill rig arrived on site earlier today for the post-Christmas drilling, and hopefully we'll start drilling tomorrow.
Fantastic.
So Elaine, if you can go to the next slide. In Canada, we've announced a large discovery, or a very significant discovery in the last couple of weeks at our Ontario Tycho project. It is a nickel dominant project, and what we've announced are magmatic sulfide intercepts of exceptionally high grade, the highest grade being about 8.7% nickel equivalent over 4 meters. And as you can see in the cross section on the top left, it's very shallow, less than 30 meters of depth. It's open and getting slightly wider. Hole number 22, which was announced earlier this week, was about 7.5% nickel equivalent over 4 meters. So really excited about that. It certainly bolstered our share price and has a lot of inbound phone calls happening right now. And we have crews that arrived 2 days ago on site who are doing another horizontal loop EM survey over the target to better define the conductor we have there and do some downhole geophysics in anticipation of the next phase of drilling at Tycho. So very pleased with that. And, you know, especially when you think about, you know, 8 or 9% nickel equivalent, you know, that is very high. So, you know, 193 pounds per ton, and the cost of a pound of nickel is around $8. So very high value material. And we're looking forward to hopefully defining a very high value shallow resource that that could be exploited. But it's only one very small piece of a very large land package that's woefully underexplored. So there's certainly more work to do and a lot of blue sky attached to this project as well. And although I don't have it in the deck, we will be drilling our second project in Canada. We're starting to build an ice road this past week, and hopefully we'll get that drilled in starting in February. So with that, I'll pause.
Okay, that's a really, really great overview. I'd like to sort of bring in Mark first. I guess there's a little like side question for you, Mark. I mean, perhaps you could just explain a little bit about what sort of projects sort of like Auramet sort of gets sort of like involved in. And I was also wondering whether you sort of had any sort of thoughts on Palladium 1's project, and whether you had a question for Derrick.
Well, I mean, Derrick is an earlier stage exploration at this point. I've known Derrick for a large part of my career. A great guy, so it's a company that should be taken very seriously. At Auramet, we're a merchant bank, and we trade a lot of platinum group metals. We about 1 million ounces of platinum, couple of million ounces of palladium, and close to 500,000 ounces of rhodium was our count for last year. So we're intimately involved in the supply and the demand side of the PGM equation. We are very optimistic or very bullish on particularly palladium and rhodium. We've seen that in the price action, and we remain so for the medium term, based on, you know, the supply and demand fundamentals. The largest supply of the palladium is mining from Russia, so you can make your own judgments on how reliable or not that may or may not be. And you know, with electric vehicles, you know, we in our firm have done some research, and our economists believe that electric vehicles are coming, but it might take a little longer, and there's some reasons for that, and I'm happy to share that article at some point with you, Andrew, or with anyone else. So, but electric vehicles need more, they use more palladium than the combustion engines. So I think everything's, you know, I think in terms of the commodity that the commodities that Palladium 1 is focused on, we as a company and myself personally are bullish on a medium term. I mean, short term, Derrick's not going to be producing anything, but it's a medium term opportunity here. But I guess 2 questions, Derrick, I have. Great summary. One, that land in Finland there, all the elliptical pictures there. Do you own all of that land?
We have it under exploration license. So we hold land in 2 different ways in Finland. One is exploration license, where we have about 38 kilometers of the basal contact, and you're just focusing in on about 4 kilometers there, what I showed you. In addition to that, we have, for better use of terms, called staked reservations, where we have a priority right to convert the land surrounding the permits into an exploration permit. And we're actually doing that right now at Kukua South that I showed you on the image, that eastern portion where we have an additional 2.5 kilometers of strike length. So yeah, it's 100% controlled by ourselves at this point in time. There is no available land. One of our partners, EMX Royalties, has staked all around of our property. And at our second project in Finland, which adjoins LK, it's the KS project. It's actually hosting the feeder dike to LK. All that land has been staked as well. And in fact, the Finnish Geological Survey is doing a 3,000 meter deep hole right beside that property. So that's something we're looking forward to seeing the results of. But there's been a massive staking rush in Finland, in part because it's an excellent jurisdiction to work in, with huge institutional database of information, and it's very underexplored, hence the opportunity that we have.
I have to agree. My second question really was, I see with our mining clients that we deal with the recent change in the equity markets for junior companies, their access to capital. We're now starting to see some congestion in availability of drillers, availability of getting your assays done on time. Are you experiencing that or seeing that yourselves in Canada or Finland?
Yeah, we're seeing it actually in both Canada and Finland. The key issue and bottleneck right now are the assay labs. They downscaled during the quiet times over the last couple of years, and are having to build back up capacity, because as you point out, there's been a tremendous amount of money that has been raised by a lot of companies in the mining space over the last 9 months. They're deploying that capital, and it's common in some jurisdictions where companies are waiting 12 and 16 weeks for results. In fact, in Finland right now, I had anticipated getting some results back about 3-4 weeks ago, and I'm still waiting. So that's definitely an issue. Drilling capacity is an issue as well, but given a lot of jurisdictions require permits in order to drill, there seems to be enough shifting around that you can get things done. But technical expertise is also being constrained.
Yeah, that's what happens when you start to see a bit of a cycle coming. Thank you.
Thank you, Ed. And then I'm just very keen to bring in Chris. I was wondering if you had any thoughts about Palladium 1 and any sort of questions for Derrick.
Yeah, well, I think it looks really interesting. I mean, I guess my questions would just sort of revolve around maybe capital structure, and I know you own, I think, 100% of the projects, and what your sort of philosophy is on partnering and joint venturing, and maybe just managing the inevitable dilution that comes along as you develop the project. Just interested in your thoughts there.
Yeah, so from a capital structure perspective, we've got about a $60 million Canadian market cap. 180 million shares are out, fully diluted, about 200 million shares. Insiders own on a partially diluted basis approximately 25% of the shares. Our largest shareholder is Erick, who is very supportive of our activities. He actually just bought an additional 16 million shares in December from the exercise of the warrants. So, as I mentioned earlier, our focus is to add resources on a per share basis. So yes, although you may have additional shares being issued as you're raising funds, if you can incrementally add value to each share that's outstanding, that's really what our goal is, and to control that process in that manner to maximize the value potential for our shareholders. To your question with regards to looking at partnerships, in other words, and other forms of advancing the projects, sure, we're all ears. Anything that makes sense for our shareholders, we will listen to.
Great, thanks.
And I'm just going to just ask one question myself. We've talked a lot about Palladium so far. Is the main attraction of Palladium 1 to invest in a world-class Palladium project, or are there other PGEs that you're exploring for that you are bullish about? you'd like to
Well,
highlight?
at LK, we have a polymetallic deposit. So we have palladium, platinum, gold, nickel, and copper. So we've got a whole suite of metals there. And I think ultimately when this goes into production, there's going to be rhodium and cobalt recovered as well, although it's not in our resource. At LK, about 60% of the economics are tied up with palladium. So that is the key discussion point. Whereas when you look at what we've just discovered in Tycho, that's very nickel dominant, very high value material. So it's going to change the ratios. And quite honestly, having being in the fortunate position of having two really significant discoveries all within a year has forced us into a position where we really need to strategize and think about next steps. Our focus and our flagship has very much been LK. We consider it a farming exercise where you just go drill. We're going to do it on a prudent basis, and we're going to add resources. We believe that we can add ounces at LK and Kikuyu South in particular, probably around $2 Canadian per ounce in a market where the palladium price is around $2,400 per ounce. So that's probably a very good use of money as opposed to going in higher risk projects such as the KS project. So we've got some decisions to make as we move forward here. And I think right now we're getting investment interest both on the nickel side, copper, and palladium.
Yeah. I think I'm just beginning to wish that that I'd actually gone and brought shares in Palladium 1 rather than Hive. So I think with that, a big sort of thank you to Derrick. We need to move on to our next sort of presentation. If anyone's got any questions for Derrick, please feel free to post them into the chat function, and Derrick can obviously separately answer those questions there. Our next update is from MKU Resources. You heard from him earlier, but Erick Jaimes has over 30 years of experience and is a world-class expert specializing in mergers, acquisitions, and divestitures. He possesses expertise leading the application of best practices in M&A activities, major studies, field development, and the execution of oil, natural gas, LNG, refining, mining, and infrastructure engineering projects. Today, he is talking to us about investment opportunities in aluminium refinery plant projects in Indonesia. Over to you, Erick.
Well, thank you very much for the introduction, Andrew. So just before we begin, let me just tell you a little bit about MKU Services. We are a company located in Houston, Texas. We have, our team consists of some highly experienced experts in different areas of the business. We are now, for these two particular projects located in the Kalimantan Island in Indonesia, we are representing the Indonesian government. The reason why we are representing the Indonesian government is because they are very supportive of these two companies that are developing these two projects. The contribution of the mining industry to the Indonesian GDP has been around 11 to 12% in the last 5 years. So it is really important for the Indonesian government to support these efforts, to develop these projects, and to help them in every way they can to be successful. As you know, of course, in 2020, still in 2021, COVID has represented an issue for all of us. And these two particular projects were not an exception, unfortunately. But we do see that these two projects that we're presenting here today have a lot of potential, very attractive, very good projects. And, so Elaine, you can go to the next slide. So we can actually begin with project number 1. So once again, this project is located in the island of Kalimantan. And the area size is about 130 hectares. And that area is going to be used for the refinery itself, for the port, for tailing, and of course for any other supporting infrastructure and facilities that might be needed for the project. The capacity, or the expected capacity, the production capacity of this project is around 2 million tons per year. It's a very good sized project. This project has made some really good progress beginning in 2017 with the land acquisition. In 2017, in 2018, the EPC contractor was selected, was hired. They completed the engineering, the preparation, and the planning for the project. In July of 2019, the project began its execution phase, and it has completed some really important milestones as far as fabrication, equipment fabrication, procurement, and the construction of some of the infrastructure. So this project is supposed to start commercial operations by the middle of 2023. So despite the little setback of 2020 with COVID, the company still believes that it is still on target to deliver product to the market by 2023. The total investment for this project is around 1.2 billion US dollars, of which 42%, around 500 million, have already been spent, with 700 million still to be spent in the next couple of years, 2021 to 2023. Next one. So once again, and before I continue, I mean, we are actually presenting these two projects to the market in phases. So for us, this is phase one. So we are giving you guys some high-level details on these projects, and of course, hoping that if any of you, if anyone is interested in moving forward and learning more with about these projects, and then of course, to get in touch with us, and we will be able to share more technical details, more the financial details of any of these two projects. So we have just a few slides on these two projects. So the IRR for this project is around 13%, which we believe can be improved. And the assumption for the calculation of the IRR was at $3,000 per ton. We're seeing a little bit of a higher price right now. And not only that, we think it could be better also by some improvements that can be made to the project execution itself. Next. So this is our second project. It's a project of a very similar profile. It's a project that includes some import and export jetties, power plants, water treatment plants, dormitories, living quarters. It's located around the same area, which is an advantage for finding resources, and I'm talking about human resources for delivery of equipment and for everything that's required for the development of these two projects. So once again, on a very similar profile, this project began in 2018 and is expected to achieve commercial operations by the end of 2023. So about 6 months after the first project. As far as the cost of this project, very similar to $1.2, $1.3 billion. We can go to the next slide, please. 1.2, almost $1.3 billion. The IRR is a little bit higher from the previous projects. This one has an IRR of 15.5%. The reason for that is because the assumption for the commodity price is 358 versus 300 for the previous project. So we believe that there is some room for improvement here as well. But that's basically different. Two very similar projects, highly supported by the Indonesian government. As a matter of fact, the Indonesian government made some adjustments, some amendments to the regulatory requirements to make these projects and to make the region actually more attractive to international investors. So the commitment of the Indonesian government is there. There was a report from the World Bank for 2019 issued at the middle of last year, and it rates the different countries in the region, from a low risk to a very high risk. And fortunately for Indonesia, there are nothing that is beyond medium risk. So most of the items are like 9 or 10 different items that what they rank the countries in Indonesia. Indonesia is being seen as a very good for foreign investors. So that's all the material that I have for these two projects. If you guys have any questions, our email is management@mkuservices.com. We will be more than happy to take any questions at this time.
I'll kick off with a quick question myself. It sounds some really interesting projects there. Do you have any formal off-takers?
Yes, I mean the two companies have formal off-takers. Most of them are from the region, mainly from China, which is an advantage to the two projects because of the proximity. You know, of course, the transportation cost and logistics and everything else makes it a lot more attractive to you know, for the economics of the project, right? Also, the two companies are trying to negotiate some contracts with European and American buyers, and maybe I'm not sure if you guys have heard the Elon Musk from Tesla recently had some very serious conversations with the president of Indonesia. I'm not sure if he went to Indonesia or how they communicated, but they're in communications, and I believe Elon Musk is one of those investors that really want to invest in Indonesia in some of these projects because of, you know, trying to eliminate, I guess, middlemen, you know, for these projects on the automotive side and also on the in the space industry side as well.
Okay, I'm bringing in Chris Berry. Do you have any thoughts on this project, or kind of like a question for Erick?
He just addressed it. I was going to ask him about offtake and the automotive business. I guess maybe, you know, to follow up on that. I mean, what does the political climate in Indonesia look like with respect to Chinese investment? I mean, is sort of a situation where, you know, the doors are open, and as long as there's a partnership, I mean, any source of funds is welcome? Or, I mean, do you think the government would rather deal with an Elon Musk or an OEM as opposed to a government? I'm just curious on your thoughts there.
Well, I think at this point the government is open to any serious investors, right? And of course, Elon Musk brings the big name, right? And he brings, of course, the reputation of doing business in Indonesia with Elon Musk will actually elevate the country in the confidence of international investors, you know, that want to invest in different mining assets in the region. You know, of course, I mean, China being the next door neighbor, and being is expected to be the 50 is supposed to be in the future. The forecast says that 54% of the aluminum will be used by Chinese companies. So, you know, it is a big market for the Indonesian products as well.
There's a couple of questions in from the audience. What is the cost per ton of refining bauxite to aluminium?
I don't have that information with me right now, to be honest with you. I don't have the cost of.
Okay. There's another question. Would you be open to enhancing the bare bauxite to aluminium process to produce greater yields?
Yeah, no, I believe these two companies are open. I believe I mean, of course, everything, I mean, once again, like I said during the presentation, there are plenty of opportunities for the company to optimize the IRR, and those will actually be some of the opportunities that can increase the return on investment for these projects.
And then just bringing in our other investor guest, Mark. Do Auramet have any sort of investments in Indonesia at the moment? I don't know if you have any sort of questions for Erick.
No, we're not active in that part of the world, I'm afraid to say. I guess, I mean, a long way back in my career, I was involved with the physical aluminium business in my Barclays days in London. But I seem to recall that this industry is extremely reliant on cheap power. What's your power source, and how reliable is it?
Well, you know, that is an excellent question. I mean, one of the things that I said a little bit ago is that the government is really committed to supporting this project. One of the commitments and one of the things that they did during the amendments of the regulations the last summer 2020 is of course the commitment to provide cheap energy to some of these refineries to make sure that there is plenty of supply in that they supply it as a cost and make those projects viable. So the commitment is there, the commitment to support the projects, and of course, to make them economically viable.
Mm-hmm. Question which I'm keen on sort of asking, because again I've been to Indonesia a few times myself as well. I'm just interested in terms of the some of the staffing sort of issues or challenges. Are there enough qualified personnel to complete these projects in the region?
Yeah, I mean, you know what I mean. The education system in Indonesia has been training a lot of people in the mining industry. So plenty of engineers. I saw some numbers a few months ago. I mean, actually a couple of weeks ago, during this webinar that we had with the Indonesian consulate and the Indonesian embassy, and they showed us the numbers of professionals that are coming out every year of universities in technical schools in Indonesia, engineers and technical people. They have some good numbers, and especially, once again, for these two particular projects, they are in the same area. So there is a lot of concentration, a big concentration of these human resources, of these well-trained people to execute these projects. Also, one of the things that I heard during those presentations from the Ministry of Energy and Mining in Indonesia is that the average age for those professionals is around 28, 29 years old. So very young, very well-trained population that I can actually, of course, when you run the economics for your project, you're thinking, do I need to bring experts? Do I need to bring engineers and technical people from other parts of the world to make these projects happen? And the answer is, Indonesia has the capability. They can provide those resources with no issues.
Mm-hmm. Well, thank you very, very much for that. I'd now like to ask Elaine perhaps just to bring up our next polling question, if Elaine can bring that up on the screen. And again, thank you very much to Erick for a really enlightening presentation. Again, with the start of 2021, very, very general question, which region will see the greatest increase in mining exploration investment in 2021? Giving you 4 options. Asia, which for the purpose of this poll also includes Australia as well, North America, Latin America, Europe, or Africa. Whilst you're voting, let me ask the opinion of our panelists. Perhaps I can just turn to yourself first, Erick. Which sort of region in 2021 would you put your money into, and why?
Now you got me thinking, Andrew. I mean, that is a difficult question to really. And I guess maybe I'm being a little bit biased, but I would say Asia, right? Including Australia. The reason why is because, of course, in North America, I think some of the environmental requirements are going to be more strict. So I'm going by process of elimination. In Latin America, I think the major producer in Latin America of mining products is Chile. And in Chile, you got all the big companies. You got BHP, you got Rio Tinto, you got Anglo American. You have all of these companies already developing big projects. And in Europe, as well as in the US, environmental regulations might not allow for growth. Africa is always is a continent that is ongoing. I mean, I got to spend some time at the beginning of last year in Zambia, Congo, and South Africa, and I got to see myself some of the maybe how do I say this? Some of the roadblocks that might be imposed by some of the government officials because of for different reasons. So and I'm specifically answering this question based upon 2021. So in 2021, by process of elimination, I think Asia will be the region with the greatest increase.
Okay. What would your answer be, Derrick?
I think North America. There's a huge emphasis now for understanding where people are investing money, and that people are seeking out politically safe jurisdictions with lots of stability, rule of law, etc. And that is exactly why Palladium 1 is in Finland and in Canada.
Yeah.
So I think just due to
and so if I had to sort of pin you down between Canada, USA, and Mexico, which one would you go for?
I think there's going to be a tremendous amount of stimulus in the U.S., but maybe not in mining with the new administration. So I think it probably would be Canada out of the three.
Okay, so invest in Canada and invest in Palladium 1. Okay, it's a very, very clear message. Bringing in Mark, I guess I'll ask like a side question for you first is, before you answer the question, what would be the impact of a Biden presidency on commodities in the mining industry? And the second question for you is, what is your answer to the polling question?
I'm going to answer you the other way around. So I'm going to say I'm torn between North America and Latin America. My experience is and when we're talking here, it's a specific question on exploration investment. I think the greatest amount of money that's raised for exploration is it done in the Canadian markets. The those investors understand North and Latin America better than they do these other jurisdictions. So by the nature of the size of the amount of money that is raised in, let's call it North America, particularly Canada, and where their general comfort patch is, it's going to be North and Latin America. I agree with Derrick in that North America provides lots of stability. But what brings me a little bit more to Latin America is I'm bullish on copper and the likes, and of course the United States and Canada has copper deposits, but still Chile, Peru are big areas for going hunting for those sorts of assets. So I'm sorry I'm not answering, giving you a definitive, but I think it's somewhere between North America and Latin America, based on where the money is raised, where their comfort is, and what are the metals perhaps for the future. In terms of the Biden presidency impact, I think we'll see a very significant stimulus. I like to be optimistic with this change. Of course, there has been a lot of deregulation under the prior administration. Will some of that regulation start to creep back in? Probably yes, but I think the focus for the first few years here is to get the economy re-energized, and as we sort of all acknowledged, maybe COVID takes a little longer, so it's going to be I think he's going to be positive for industry, at least in the near term, and then maybe towards the end of the term maybe they start to look at more regulation and those sorts of things.
And Chris, we were talking just before the show started that you've relocated to Washington DC recently, just in time for the inauguration. But I guess what would your I guess exactly the same two questions to you. What would your answer to the polling question be? And again, what would the impact of a Biden presidency be?
Yeah, I think that I guess, again, coming out of COVID and also the U.S.-China sort of trade war between, sort of that face-off between President Trump and President Xi, I still think there's a really strong impetus in North America and also in Europe, for that matter, for more resilient or more localized supply chains. And obviously a big part of that is security of supply around the metals that are going to feed these supply chains that are meant to perhaps decouple or minimize reliance on China. It's not going to take a year. It's going to take 5 to 10 years, I think, to do it the right way. But the impact of a Biden presidency, I think it's a little early to tell. I mean, he has certainly indicated that he wants to foment growth through trillions in stimulus, and green growth is kind of the buzzword right now. I do think, look, there's probably going to be a reckoning along the supply chain and between the environmentalists and between the mining groups about how we grow and how we build these supply chains, especially for critical metals and critical materials, do so sustainably. And I think that, look, we're all going to have to realize that we're going to have to give and take a lot to get this done, but I think it can be done. But it's going to take, this will last well beyond a Biden first term, I would think.
Okay. Thank you very, very much for that. And I think actually with that brings us to the end of the first show of the year. So I'd just like to bring the polling question up. Said Asia, Australia was the clear winner. I'd just like to go and thank our guests, Erick Jaimes from MKU Services, Derrick Weyrauch from Palladium 1, Mark Rice from Auramet Trading, and Chris Berry from House Mountain Partners. Also, big thank you to our sponsors, Palladium 1 and MKU Services. Also, a big thanks to the Resource Global Network for supporting the event. I'm off to go and sell my shares in Hive and buy some shares in Palladium 1. So until next week's show, please go and stay safe. Thank you very much for your time.
Thank you, Andrew.
Thank you all.
Thanks.